If you're like most real estate agents, you hate accounting and taxes. In fact, you're not unlike most business owners. IRS regulations on record keeping, tax forms, it's the one thing they did not go in business to do. They went in business to take care of clients or do something that they love. In your case, it's selling real estate, helping buyers and sellers find their homes, meet their family needs, and so on. But record keeping and taxes are part of the business. And I always find it interesting, you're in real estate, you help your clients make the biggest financial decision of their lives. And yet when it comes to your own accounting and taxes, most agents are overwhelmed. So to help you, I want to give you 3 very simple systems that you could use to facilitate the record keeping in your business and make sure you're keeping track of all your expenses and your income. You're avoiding overpaying the IRS on your taxes, and that you're having more money in your pocket at the end of the day so that you can live the kind of lifestyle that you envisioned when you first went into real estate. Hi, I'm Jim Flauaus. I work with real estate agents and brokers around the country. I do hundreds of tax returns a year for Realtors. It's become my area of specialty, and you can learn more about me and what I do at realestatetaxcoach.com. So that said, there are 3 systems you could use, and really these 3 systems very much align with where you are in terms of your experience and in terms of your establishment of your real estate business. It's very much like the 3 types of homes you might sell. You might sell a starter home to a young couple just getting started in life, or a few years later you might have help them to move up property where they've established a larger family, they have bigger needs, so you might have taken them from the starter home up to the home that, depending on your locale, might be a 2,500 to 3,500 square foot home that they can be proud to live in and raise a family. And of course, the third type of home is the executive home, the mansion, the 5,000 to 7,000 or more square feet home with the pool and all the amenities that go along with success. So it's very similar in the accounting and record keeping field. Number 1 is for the agent who's just starting out, or perhaps you're part-time in the business. Well, you don't need to spend a lot of time or a lot of money on record keeping and taxes. You want to operate lean, you want to operate mean, and to operate lean and mean, I recommend you just go with a very basic, old school record keeping system. What do I mean by old school? I'm talking about paper-based records. What do you need for this system? Well, what you need is very simple. Maybe a handful of highlighters, a handful of file folders, and at the end of every week, you are collecting, all your receipts out of your wallet, all of your credit card receipts, all your cash receipts, your bank statement at the end of the month. You're taking all that information. With your bank statement, you're basically just setting up a system where each of your file folders may be for a particular expense category. What are the categories that are most important to real estate agents? Well, it's pretty simple. Advertising is a big one, so you might have a file folder for advertising, another file folder for dues and memberships to your MLS or your Realtors Association, another folder for all of your auto expenses, and maybe another folder for office supplies and so on. So those are the types of records and systems you use. So at the end of every month, you have taken all of those receipts and you file them by file folder, or you take the bank statement, you highlight all of your dues and memberships in purple, and you highlight all of your auto expense in blue, and you highlight all of your advertising in pink and so forth. And so therefore you just add up the total amount that you've spent by category, and you just keep a record of that. And at the end of the year, you add up all of the 12 monthly totals, and you're done. The key is not to wait to the end of the year or even to the end of the month to do this. Maybe you can do some time blocking, and you can set aside a time, maybe every Saturday morning, maybe every Tuesday night, whatever fits in your schedule, where you're just doing this dump. You're taking all of your receipts out of your purse, your briefcase, your glove box. You're downloading your bank transactions from the most recent week. You're downloading your credit card transactions. You'll go into PayPal. You gather all of those transactions. You just add them up, and so you've got a running total by expense category. That's the number one way. Number two is for someone who's a little bit more seasoned. Let's say you've got a year of of well-established success in the field. You're in your second or third full year of real estate. You're full-time. You've established your business as a going concern. I think now, rather than running an old paper-based system, you certainly can use and know how to use a spreadsheet, whether it's a Google Sheet, Excel document, something on your Mac, just a spreadsheet that you can keep as a way. Here's an example of what could be the end result of a spreadsheet. You could build this into again, an Excel document or a Google Sheet. If you'd like, I'd be glad to make available. In fact, I'm going to post beneath this video a link to a Excel spreadsheet that I've created that you can use that's specifically for real estate agents and brokers. And it actually lists the categories that are deductible for real estate agents down the left-hand column. And across the top, as you can see, it's got the months. So as you plug in the numbers as you go along each month, then at the end of the year, it's very easy to have a total. So rather than taking a whole day or a day and a half in February to pull all your records together, you simply hit the sum button on your Excel spreadsheet and you take that into your accountant, or you send it to me if we're doing your taxes, and you've got an immediate profit and loss statement. If you're not familiar with a profit and loss statement, this is it. It shows your income up top, and in the real estate world, typically that's the gross commissions that your agent, your broker pays you. Don't forget you're going to pay that broker a few little fees for admin or copy fees, desk fees, technology fees, whatever they call them. Maybe you're in some type of an advertising co-op with your broker. They're going to take a little fees off that. So you might have your 1099 at $101,000. You might have $100,000 of fees during the year to your broker, and then so that's $101,000 left. And from that, you've got all of these expenses: accounting, anything you pay to an accountant to do your taxes, to do payroll, to do bookkeeping. That's a deductible business expense. Advertising in a lot of different forms, bank fees, commissions that you might pay out, anything you spend on a computer or equipment, dues and memberships, internet expense, licenses, anything you spend on continuing education, client gifts, errors and omissions insurance, meals, no longer entertainment. The new tax reform law of 2017 ended entertainment, but you can still deduct the cost of meals where you have a bona fide business discussion with a client, a prospect, or a business associate. And yes, that means you and a fellow agent or a broker can go to lunch, strategize on how you're going to achieve your goals this year, and that can be a deductible business expense as a business meal. Office supplies, payroll if you have an S-Corp, repairs and maintenance could include a cleaning lady that you paid to come clean out a house when someone moved out. It could include the repair that you had to pay for as a picker item just to get a closing done. Any subcontractor fees. Don't forget your cell phone. If you traveled to see a business coach or a convention, or you went to the state convention for your Realtors Association, maybe you went out to San Diego to see a Brian Buffini event, maybe you're a Keller Williams agent, you go to Austin every year for the family reunion. Those are deductible travel and convention expenses, so don't forget those. What's not on this sheet? Auto expense, office and home. Those are separate spreadsheets that I've created. Anyway, this is a system you can track if you're an established agent and you just want to use a simple system without getting involved into QuickBooks or Xero or some type of exotic system where you've now got to learn accounting as well as take the time to learn how to use that software. So that's the second system. So the first is just the old paper-based receipts and bank statements that you're adding up, putting into folders, highlighting. The second is a spreadsheet system. The third is a full-on accounting system. And this would be for certainly if you're now a broker or you lead a team where you've got more going on than just your own sales and expenses. Maybe you're doing some property management. Maybe you've got a team where you're paying the commissions out to other agents, or you've got a full-fledged brokerage. You need a double-entry bookkeeping system at that point, which would be QuickBooks or Xero or some double-entry accounting system. So the significance of a double-entry accounting system is that it keeps records of things beyond money in and money out. You know, when you first start out in business, when you first start in real estate, you think all money goes into two classes. You know, money comes in or money goes out. Well, the reality is not all money that comes in is taxable income, and not all money that goes out is a deductible expense. So when you get into being a broker and your needs are more complex, or you're a team leader, or let's say your production is $200,000, $300,000, $400,000 a year in commissions, you've got a lot more going on. Maybe you take some of your own money and you put it into your business bank account just to have some operating capital. Well, that's not income, so that is actually owner's capital put into the business. Or maybe you get a lease on a copier. Well, now you've got a liability or an obligation you have to pay on lease payments. So how do you record that into your accounting system? Well, you need a chart of accounts through QuickBooks or Xero that includes items not only of income and expense, but of liabilities or payables, of owner's equity. You might take in money on property management for a security deposit. Well, that's going to be a security asset that you hold in trust, or you take in earnest money that you're holding as a broker for transactions that are about to close. You have to hold that in a liability account. Well, QuickBooks or Xero or other accounting software that is a double entry system will actually attach two labels to every transaction, because there's really two legs. One, maybe you took the money in, but then what is that money? The money maybe went into your bank account, but is it income? Is it a loan? Is it owner's investment into the business? Is it property management money via a security deposit? Is it earnest money? So not only did money go into the bank, but money went into another account that may not be commission income. It may be a loan. It may be your owner's investment. It may be a liability being held in trust for someone else, and so on. So you need a more full-fledged system. We can talk about that in another video. But those are the three systems that I would recommend. If you're new in business, you're part-time, you're starting out your first or second year, hey, a paper-based system is great. Just don't wait to the end of the month or the end of the year to add up those numbers. Know how you're tracking as you go through the year. Number two would be a spreadsheet system. This would be for the established agent that has got a year or two under their belt. They've established a clientele, and they now are tracking their expenses through a spreadsheet. Pretty simple stuff. You're probably filing your tax return on a Schedule C. All it really requires is income and expenses, and you don't need anything further out of your accounting system. But then comes the more established agent, the team that's maybe doing 200, 300, 400,000 or more a year, the broker, the established agent, where maybe you're doing business now as an S-Corp, you're paying yourself a salary. You need an accounting system, and QuickBooks is a great one, where you could actually just upload your receipts via your phone app into QuickBooks. QuickBooks can automatically read that, even classify some of the transactions. It can classify your other transactions professionally. Those are kind of your three options. They really kind of track according to your level of experience and establishment in your business. And frankly, I wouldn't jump immediately into QuickBooks until you've had some experience, one, collecting receipts, and then two, moving on to the next phase, which is a spreadsheet. As you begin to master the spreadsheet, then you get to see, oh yeah, there's different categories, and then you'll be able to establish what's called a chart of accounts in QuickBooks. So it's kind of a walk before you run, before you sprint type thing. Walk with a paper-based system, run with a spreadsheet, and then sprint with QuickBooks or Xero. I hope you found this information helpful. I'm Jim Flauaus. I work with agents around the country to help them to increase their cash flow, reduce their taxes, and basically have more money that they can live on so they have the lifestyle that they envisioned when they first got into real estate. For more information on me, look at realestatetaxcoach.com. Please also check the thumbs up button below the video here to let me know that this information was helpful to you. Share it with other agents in your office and subscribe to my YouTube channel. There's some links down below. One will give you, there's two powerful links. One will be a link to the spreadsheet that I use and that I recommend to agents. And the second is a link to a piece I put together called the Top 10 Tax Strategies that Rich Realtors use, secrets that they use so that they can keep more of the money they earn in their wallet and avoid overpaying the IRS on their hard-earned commissions. That's it for this time. Until next time, so long.